streaming service. This meeting is being live streamed. Excellent. So as I'm screen sharing live, let's see if it works.
My favorite thing is always the keys when they work or when they don't. The stream
This
keys.
has been removed by the uploader. I don't think that's true. Anyone want to double check, see if we're live on YouTube? Zoom says we are, but it doesn't mean we are. Let's see. Oh, look, I see us.
That's a good thing. That means it's working.
But is it actually going? Okay, awesome. All right, well, we can edit all that out. We are officially live on YouTube. Let's go. All right, Scott is going to do our intro today, and I'm going to go grab some water. I'll be right back.
Yep, perfect. All right, y'all should be able to see my screen. Welcome YouTube family. As we're continuing our group coaching in the second hour, you'll see my screen, hear my voice. Thank you for being here. Always appreciate it. Chris will be back in just a minute. So just a quick view of kind of where the markets are right now, and a couple of things we want to walk through on this. Can I do this with this or not? No, I cannot. All right. So you can see where the little hand cursor is right now. We've hit some recent resistance. We've come off support. There's a 60-minute chart, right? But you can see that 378.57 level right there has become a bit of a problem right here, right? So we're just kind of backing and filling. I continue to tell the group in Trader Traction, which we're about to relaunch out in, well, July 1st again. We need to get out of what realistically is this zone right through here. Now you're going to have some, you have some tightness right here. Like it's trying to tighten up. It's trying to cool up a little bit, right? But we really need to get out of this major zone. Realize on top of that, that you do have unfilled gaps. Scott, seriously, do a better job. You've got an unfilled gap through here. You're not being good today. Right through here. So this is an unfilled gap, and then you've got unfilled gaps overhead. So this is creating your opportunities for down the road. Broader market averages like the S&P, the QQQ, the NASDAQ, IWMs, which are small caps, and the Dow Industrials. They're not big fans of leaving unfilled gaps. That doesn't mean they go back and fill them immediately. That's not my point, but they do make for some really solid targets for you guys down the road, especially if we get some sort of momentum news that can start to drive them. Right now, the market is kind of back and filling. As I've told everybody, my hope is we will just churn until we get to July 1, because the counter ranges will take effect then, while most people are off having the 4th of July barbecue picnics and fishing and at the lake and on the river, or whatever you're going to do, or go camping or swimming, whatever you're going to do. But quietly, Wall Street will start moving markets again starting July 1, that Friday, and then the 4th we're closed, and then those ranges will complete on July 15th. But they will start building the next 6-month range of the market in those first 2 weeks. So personally and greedily, I would love for us to go sideways and just range bound. I don't know if we're gonna get that or not. That's what I want till the end of next week, but I don't know we'll get that or next Thursday. Also, Q2 is wrapping up, right? Q3 is about to start. So if you think about this year as a halftime, like the Super Bowl, we're going into halftime. Okay. And then we're going to come out of that in Q3, and we'll have earnings start to launch out from Q2. That'll give everybody a lot more to digest. One more point while we're here. Again, we're kind of like playing chess right now. We're thinking beyond the next 20 seconds of trading, the next 20 minutes or the next 20 days. September statistically is not a good month for the markets. And then it's followed by October. Okay. It's also the ninth month of the year. I only surfaced this because you have certain businesses that, well, you'll have markets that will do some rebalancing in their portfolios, like the S&P. They may have some additions, subtractions from it, some rebalances at the end of that quarter, right? Along with the quad witch at that point. And this is way down the road. But realize the markets are a discounting forward-looking mechanism. And that needs to sit in the back of your mind, because as we go forward, some of you are with us now, and you might not be with us in a couple of weeks, whatever, when we come back to these conversations in the months ahead. Be thinking ahead. If you're trading individual stocks right now, let's say a Goldman Sachs and Apple, Okay, when are their earnings? So 5 to 8 days in front of that earnings, 2 weeks out, start looking at your stock's behavior. Do you think it's trying to move up into earnings or down into earnings? You don't have to hold through earnings, but you could use the earnings announcements to see if they're trying to draw the stock. And you can do that the day of earnings. So pretend the earnings are after the close. Let's just say it was today of whatever symbol it is. Today could get a lot of volatility or a lot of movement because there are earnings at the closing bell or tomorrow morning. And so they will drive a stock up or down. So during earnings seasons, which is coming up, guys, there's opportunities knocking at your door like, Ed McMahon, here's your check. But you need to be preparing for that and figure out what symbols you want to trade with that and when the expected earnings dates are supposed to be for your stock. And I know sometimes they're not published, it seems, are hard to find. Others, it's clearly easily defined and find when those are. Chris, your thoughts?
Well, yes.
I can shift to, hang on one second. Let's go to longer term. This is my long-term monthly. This is not a curve fit. If you've ever seen how I do this, this is nothing but this is curve fit, whatever. It's just a simple pivot structure that created everything you see on the screen is from literally using nothing more than 3 pivots the way I teach it. And so the value behind this for a lot of you is you can see it's the S&P, it's in a monthly chart. You can also see where the S&P seems to be finding some short-term, near-term support, right? We're also on the third wave down technically at this point. If this month closes red, I think it'd be difficult for us not to close red this month unless we just had the most incredible rally we've seen in history. Maybe the war in Ukraine ends or whatever. I don't know what would drive that reversal from here. But reality of it is we're third wave down and we'll see how this plays out. I did see an article that was sent to me today that says traders are stockpiling the most cash in a decade, according to JP Morgan. This is a Bloomberg news article that's out there. If you want to go dig in and read up on it. And so it is fascinating. It's like 40% number, something like that, digging in from what I read or what I've surveyed on. I haven't really studied it yet. Are we at major support? Are we going a whole lot lower? We talked about this in the group coaching. When you guys look at bottoms in a market, okay, if you think it's a bottom, yeah, you get the V reversal, but a lot of times there's a lot of testing and retesting in those zones. And you need to be helpfully aware of that as opposed to trying to be just, penny perfect or doing the zero turn like we did last week with Josh. But the idea is to recognize where you are in a more macro frame. Some of you are active day traders. You could care less about this. The problem is you're an active day trader and you don't care about it because you don't realize the market is stuck in a range because it's in congestion. When you go in the middle of a fib box or the middle of a channel, guys, when it first gets there, you're coming in to support like a trampoline. And then they typically consolidate inside of that for a little bit, like 5 o'clock traffic versus 2 a.m. on the interstate somewhere where you live, where there's nobody awake and it's only you. Same thing's happening here in the marketplace. And the thing is, traders don't see that because the market's been so volatile. And now they're like, oh, well, I'll just go all in now. And now you're pressing trades where you shouldn't be pressing. You're trying to force grand slams and there's nobody on base. In fact, nobody's even in the stadium right now. Like we're going to end of Q2. But eventually, again, this will stop. Stop, Scott, do this. It'll stop. And we'll get out of this range, out of this zone, if you will, and we will start to work ourselves back higher. But that's what we get to look forward to that is coming. Just be patient with it. And, usually bottoms are not just a 30-second event. At some point, that bottom is there. But for most of you, the way you trade, the way you invest, unless you're just trying to build a position over time, let the market get through this. There is a waterfall of energy that has come down with this. For example, different little thought process with this one we're here. This is my bull bear. Even though I don't really like the terms bullish and bearish, I try to stay away from it. But this is something I created. This is based off of old Wall Street logic beyond the 20% crap you guys have been fed on TV, which is actually not what defines a bull or bear market. The modern lexicon may bring it that way, but that's not it. But that happens to be embedded on this chart as well. just so I can, look at this and say, everybody's measurement is saying that Goldman Sachs is in a bull or bear market. Well, if you look at the left side, this was a bull market. That's why it's bright green, bright yellow. Over here, it's the more pinkish, reddish, orangish colors, which is a bear market. And if it's dark, it's a neutral. That means I have no bias, bullish or bearish. Well, if I'm in a bull market, I want to buy the dips. I want to buy the falling back. I want to take it back higher. In a bear market, I want to sell the rips. Well, these last two I've documented out for particular clientele. This is around the 340 and this is around the 325, 326. That 340 move back down to basic support was in 302. This one down here was around the 281. Now it's sitting on support. Well, guess what's in a few weeks? Earnings again. So if you know you're in a bear market, why are you trying to get long something? And if you are getting long in a bear market, specifically to your stock, okay, you can have sectors that are in bear markets and you have sectors in bull markets, right? So if this isn't a bear market, as a simple example of this, we'll notice the extension of the waves down are greater than the rallies up, which is normal behavior in a trending market. This is the way it should look, just like it goes more up and then pulls back more shallow, more up, more shallow. Like that is a mathematical kind of thing you should look for. So right now I know I'm sitting on support. So if I'm short this, I know I'm at a level of support. Do I want to hold through that or do I want to take some position off? If I play it long from here, what's my expectation? Is it a rally back up to resistance? Is it back into support horizontally, or is it to the slope of a channel that's right through here? Or is it to a mean reversion that's right here? It could be that you're holding the lows here and you think it's going to revert to the mean right there, and that trade's worth 7 points to you. And you're going to have 10 contracts and walk away with like $3,500. The problem is I'm still pushing a boulder up a hill at the end of the day, and I'm not a fan of that. But if they can do it quickly and I can get my profit out of it, I don't mind that. But the better trade is to sell the rips or, short when it gets into point of resistance, and I can see that and it's rolling over. Most traders won't look at it this way. That's the hard part. Compared Goldman Sachs now to the NASDAQ as a simple example here. We clearly know the NASDAQ's in a bear market. You've been told this for quite a while now. And what do you see? As it rallies, they're selling it. As it rallies, they're selling it. It's not in the bull market. That would be this over here on the left side with all that pretty neon looking greenish, bluish colors or whatever it is. Once I know that, now this is my macro. Okay, it's going to be 100 degrees here today kind of feel, or it's going to be 37 degrees where you are. Now that I know that, now I go in, I say, that's my macro thesis. I know it's in a bear market. How do I want to trade this, or do I want to trade it? If I play long against the grain, what is my expectations from this? It's not that you can't trade long. It's not that you can't scalp it long. But I'd much rather go with the energy of Wall Street at my back. If I'm in a boat, a sailboat, don't I want the wind to push me forward? You ever seen a surfer surf the backside of a wave? Does that make sense? I want the energy of the wave to curl and bring me forward on the board, or if I'm body surfing, right? I want the energy to pull me. Otherwise, if I stand, I'm 6'7". If a tall enough wave comes, it's going to knock me over. So I got to dive under the wave, right? Before it crests and hits me. And I come to the other side. Well, the wave's moving away from me. Well, how am I supposed to surf that? I can't. There's no more energy. I want to find where the momentum, the volatility, the energy is at the point of this example here. Okay. Does this help people? Chris, you want to chime in? Please do. But I'm trying to set things up for expectations. Then I can go in, I can frame my trade once I've done this and figure out how I want to trade around that position or positions, depending on who you are and how you trade.
Yeah. Does this sound a lot like Power Trader from this week? Because I was basically saying the exact
I didn't know that. I didn't see Power Trader. So now I feel bad, Chris. Sorry.
Well, no, I mean, I want to point out to people, this is basically exactly what I was saying at the beginning of this week, where, when we're going into this week, what am I looking for? Well, if we get a bounce, yes, there's an opportunity to play things, to the bullish side, but we are in a bear market. So things are going down. So if you're going to take that kind of counter trend trade, take a bullish trade this week, make sure it's short term, small position, all of that. You can do it, but overall, just be aware that the trend is down. So when I see a bounce this week, I'm looking to load up more on puts, right? Like I'm looking to use it as a way to enter more short than I am to play it to the long side. But we looked at some stocks that, you know, would make pretty good plays this week, at least from the setups that I've been watching. So we looked at a couple like Hershey did pretty well this week, as well as Monster. So those were some that we were looking at. And so, you know, if you wanted to take some of those counter trend trades, then sure, the opportunity is there. But again, like, you get in and you get out, right? This is not, I'm not holding Hershey for the long term or anything like that. It's just a quick, you know, you're in it for a day, maybe a day or two. And, you know, we had that nice big candle on Tuesday and then we're out, right? you hit the target and you're done. And now I'm looking for more trades to start building bearish positions in. So yeah, just kind of dovetails right into what you were saying too. So you guys have heard it from me. Now you've heard it from Scott too. Hopefully you believe us.
it makes it, you know, what's, I bring this up and I'm going to show Morgan Stanley or JPM while we're here with Goldman, all that. And Chris made a really good point. And this is where I want to add to this conversation for a minute in the way that if I ask by a show of hands, whether you're YouTube or whether you're with the group coaching, or if we took 10,000 traders and surveyed them, how many of you were sold the dream that you can trade from your phone on your private cruiser in the middle of the Caribbean? And you can just spend 5 minutes a day and you're a stock market genius, right? I'm playing with this for a second. Just indulge me here. And you're like, oh, man, that'd be the life. Make 100 grand a year, 200 grand, whatever you want to make. And that's the life, right? That's what you want, or $1 million, whatever it is. That's the life. And yet then you are chained to your desk. You spend 16-hour days and you want to pull, well, what little hair is left out of your head at that point, right? And you're frustrated because it has gone from simple to complicated. And the more you learn about it, the less you know. It's like, why not just take a 40,000 foot view? Are you in a uptrend or a downtrend? Just to keep it simple, skip bull bear. If I'm in a downtrend and I can clearly see I'm in a downtrend and I didn't catch the perfect top because I may not have been around, I might have been at the hospital with my dad, whatever it was at that point in time. Does that mean there's not more opportunities coming? Okay, well, if we've sold off to the bottom of something and we think it's oversold, I can either play a reversion. Hopefully it's a reversal if I'm really that convinced. But usually when stocks break out and go higher, it is from a point of a base or a plateau, something like that. It's a consolidation in some capacity. It might be some sort of flag pattern. It all depends on what it is. Why are you spending so much time in front of the machine? Why do you want to be chained to it? And that gets into psychology discussions, which I won't go into. But going back to what Chris and I both point out to you, it's pretty simple. What's the trend? It's down. All right. Where is your stock relative to that trend? Is it the bottom of that trend or it's oversold? Currently, we'll just use JP Morgan right here. Well, that's probably oversold. Does that mean it can't get more oversold? I didn't say that. Do I want to chase it at this point? No, ma'am. No, sir, I do not. I wanted to get it back up here. Like, this is exactly what I did with my client with Goldman Sachs. It's like, this is where, you know, I can't say buy, sell, hold, but I can tell you everything we could ask for. Like, we have other indicators as well. Everything we asked for was literally slamming you in the face right here. Like, it was so obvious. And then you still don't take the trade. 2 points. What's the trend? Okay. If it's down, then when it rallies back up and it starts to walk over, what do you want to do? Well, Scott, I don't short. Okay, then you're going to make some trades you can't take. For the rest of you, you're probably going to put some risk on, have your targets, and then take profits as they come. If it's an uptrend, like what was it, Hershey, I think a minute ago, if it's an uptrend, it runs up in a bull market, it pulls back. What are you going to do? Buy it back long. It doesn't need to consume your life. Unless you love doing this insanity like I do, and then you spend a lot of time because you're trying to solve little nuances. You get a little more squeeze out of the juice if you want, or out of the orange, and try and do that. Otherwise, just back up for a minute. Take a deep breath and look at your chart. What's the trend? If you can't figure out the trend, we talk about, well, actually boot camp starting July 1st, but if you can't figure out the trend, you need to be able to establish a trend first. Lots of ways you can define trend. There's no one right way, but you need to be able to define trend in your head. And that way, when the trend is clear to you, now you should know, I want to do this when it sets up. Now you framed it. Now it gets to a point on a chart where you think it's worthy of putting on risk, and you take the risk, whether it's longs or shorts. And there's only so many trades you can do. There's reversals, reversions, breakouts, breakdowns, call it Baba dips. That's basically it. I mean, you're either continuation patterns, reversals, or reversions. I mean, there's not a whole lot to do in the market, guys. But yet we take this stuff and we just complicate it. Little kids don't. They simplify things. And that's what I want you all to do, is simplify this. Take a step back for a minute and say, you know what? He might know something. It's selling lower. Okay. If we don't hold support here, then what happens from there? Or do you want to wait for it to rally back up and let the market rally? I can't tell you what to do there. It depends on your comfort level. If Chris is running a certain option strategy, that might be his ideal setup, but Chris knows it's his ideal setup. That's the whole point of this. You've got to take responsibility for you and what you're going to trade. Clearly, we want to help you at TSU and figure these things out. But if it's an option strategy you want to play and you don't want a trending market, well, then Chris would say, then I want you to deploy what strategy, Chris, would you suggest? Like, if, is it a strangle, is a strap? What would you suggest at that point is the question. Versus if it's a trend trade and you thought the bottom was going to fall out. And then Chris would say, well, look at doing this. Well, based on this condition, I would consider doing this. Everybody's different. Me, I love Momo. I love momentum. If I can get a base and a breakout, I know what I'm going to do with that. If I've had a falling knife, well, where's the overall trend? Is the slope too much? And how much bounce do I expect from it? How fast has the stock gone up? All these things factor into it. It's like inside baseball for those who love baseball. Round ball, round bat in a square frame to hit that. Not my opinion. That's what I've always learned. That's how you're supposed to be able to do it. And it didn't hit me. And then once I started trading, it just like, geometry all over again. But I hope that helps y'all. Simplify. This looks busy to a lot of you. This is actually pretty simple because the only thing I'm focused on is the right-hand edge of the chart and its relationship to what's coming down from that. That's it. Everybody starts looking at the left-hand side of your screen. Don't do that. I mean, if you need it for context, it's great. But truthfully, right now, this stock is trading at let's just call it 281. Okay. It has an ATR of, I don't know, let's say $7 out in honest God. What is it? Might be $12, whatever it is. Okay. The stock's moved, let's say $4 intraday. It could move another $6 a day potentially. Do you think that's going to really happen? It's sitting on support. We can see that. It hasn't gone anywhere for a few days now. It's just Morse coding. How much edge do you have right here until this thing breaks one way or the other? Now, if you're frustrated because the daily chart's not offering opportunity and you go your smaller term charts, what do? You play the base hits. Just hit the ball. Just get a hit. And if you get on base, take what it gives you. And if it wakes up, then take some more out of it. That's simple. It's no more complicated. It doesn't need to be. Chris, chime in, please. It's the same process over and over.
Yeah, I have a couple of things to say on that. Back when I was living in Thailand a couple of years ago.
Seriously?
Yeah. I spent most of 2020 in Thailand because I got out there like right when. So actually, I went to New York City for the very first time for my birthday, which is in the middle of March, right when COVID hit. So in 2020, I went to Manhattan and there was just nobody there. So like I walked down Wall Street and everything, and like there was just nobody out in the city, which was great. But then everything started shutting down and I was like, oh man, I had a seminar that I was going to in Thailand that year. And I was like, I kind of want to make sure, I get out before, I don't know if the US is going to shut down or whatever. So I went early and I ended up getting into Thailand. I left from Seattle, and while I was like mid-flight over there, they changed the laws and they stopped letting people in. So I landed and they're like, oh yeah, we're not letting anyone in anymore. And I was like, oh crap. So do I just have to turn around and go home? They're like, well, you left before we changed the law, so I guess we'll just let you in anyways. So I kind of got in lucky. And then it was lockdown, so like there were no flights or anything. So they just let everyone overstay their visas for like 6 months. So I was in Thailand for most of 2020. So I'm still working at TradeSmart, right? And with the opposite time zones, I'm like waking up at 5 a.m. to like teach class to everyone that's like nighttime on the East Coast in the US and all of that. It was a lot of fun. But the point of the story was like what you were talking about with the, trading from your phone, like next to the pool or whatever. Josh was like asking me to go to the beach and like shoot some promotional material. And I was like, dude, that's not what I do. Like, yes, it is my life that I can walk 10 minutes down to the beach and it's gorgeous and life is amazing. But that's not the reality of trading, right? And I don't want to portray that as something other than what it is. So, when I'm doing my trading, like I'm sitting at my desk at night, pouring over charts and doing my analysis and everything, doing all of my research, getting ready for the markets to open, because the market in the US is opening like when I go to bed. And then I wake up in the morning and see how everything did, right? So it's more akin to what people do when you have a full-time job, right? And you aren't able to sit there and trade the markets during the day. That's basically how I was trading, right? Because like I wasn't able to just watch the markets unless I wanted to be up the entire night, which I don't. So it was, setting up trades ahead of time and then seeing how they did later and adjusting basically between the market hours. And the other thing I wanted to say with that is like, one of the things that I do love about financial markets that you brought up is that like the pool goes as deep as you want to get into it. Like there are so much, the more I find out about financial markets, the more I know that there's stuff I don't know, right? You get into like some really esoteric stuff. And like, I love learning about like the 2008 crash, start learning about like swaps, credit default swaps and mortgage-backed securities. And like stuff gets really esoteric really fast and start learning about dark pools. And like, there's all kinds of crazy stuff. But at the same time, when we're helping new traders learn how to trade, you don't need to know that stuff to make money in the markets. And a lot of times I wonder, do we maybe do a disservice to people, or would people be better off if all they knew was support, resistance, and trend lines, right? Like if we never made it more complicated than that, if you stopped looking for candlestick patterns and chart patterns and all of that, and you didn't know what an indicator was, and all you did was look at support, resistance, and trend lines, like, would you be a more successful trader? I think for some people, the answer is probably yes. I know it definitely took me a long time to like get rid of all the extra crap that I had like tried to add to my trading over the years that just doesn't end up helping you. And like now it's cool to like, you have tools when you want to know something, like, you can go look up what the ATR is for the stock. Okay, fine. But like, does that matter more than knowing where support and resistance is and where the trend lines are? No, it's like, a little thing that it helps with your trading, but it shouldn't define your trading. So I do kind of wonder sometimes, like, if we just strip things away and like we only teach support and resistance, or you just throw out everything that you've learned other than support, resistance, and trend lines, right? Pick your entries, pick your exits. I think if everyone just simplified their trading a lot more, I think we'd be at a better place. So it seemed that was kind of the sentiment you were echoing as well. You brought up something though that like I really want to ask you about, because I'm curious. So you had talked about, like when you're trading with the trend and you get, let's say you're bearish, right? And it's fallen down or whatever. You had talked about, how much do I think it's going to bounce? Do you have a way to measure how much you expect to bounce? Because that is something I would love to.
Third to a half.
Really?
A third to a half. If again, it's going to depend on.
You find that consistent?
Yeah.
Okay.
Especially if you start getting into your basic fib retracements, which is the whole tipping point concept I did, that I've done for forever, like 15, 16 years I've taught. Half in a really strong trend, if you can get half, you're lucky. Most of the times you won't, you'll get about a third. And I'm using that as a broad width paintbrush as opposed to fine detail. But at least it gives you something to think about. And so most people, they look at the strength of momentum and it pulls back and it goes further. So somewhere between a third to a half, basically your little, fibs, you're 32. But it depends on, did you just come up a base? How long? How many waves down the overall market? So I don't have some absolute where I can say it's always this way. Yeah. That's why when I teach trading to people, as you said, I like knowing the other stuff because it helps reinforce certain things in certain environments. But the concept I put together years ago is called vapors. In fact, everybody goes through traction gets the vapors concept, right? Or they get the course that goes with it at some point that we do as like a bonus that I know we published that, but it is nothing more what you said. It is literally support resistance. And I literally have like somewhere a 20-minute video or 25-minute video. I'm literally in real time walking through the actual trading thought process as it's breaking down and we're going to next, like literally in real time. It's like a 1-minute chart or 5-minute just to show the point. You're just like, seriously? Because you know where these trap doors are. Whether they're going up or down is not the point. It's like, if you break this, you should go to here. The elevator should go up the next floor. And so when I'm looking at market, if I have a very strong downtrend market, I really shouldn't have significant balances. The problem becomes is you sit here and say this, and now the market's down 40% in the NASDAQ. Well, do y'all think we're going down 50, 60%? Okay. And I'm not asking you to answer that. I'm saying, how much more gas is in the tank for this? How much more than that little needle for your charge or whatever you got in your, electric vehicle? And that's where it starts to get, how many more, miles a gallon you got left before you have to go refill. And so that's where that comes into play. What I find fascinating is if you look at like, this is Bitcoin, you can see where it started shifting into the bear market over here, right? You can see the little line that run up underneath here and then it falls over again, right? Most traders, what happens is they don't trade in zones. For those of you who love, a zone defense, right? Or I guess is what the 2-1-2, approach in basketball or whatever it is. Like there's certain setups, certain zones you can play. If you stop looking at every individual bar as it's do or die, and you look at that price relative to a zone, and now we go look left on Bitcoin, where do we find some support? Well, there's some right through here because look left, that's a shelf. It ran up, it shelved. Anybody like to ride motorcycles, dirt bikes? And you go out in some terrain, you go up this hill and it kind of plateaus and then it goes down again and goes right, stuff like that. Okay, markets are the same way. But yeah, we make it more complicated because we want to look at every individual bar. Now we can create different strategies for different things. The big thing is, can you see it? And realize that, again, as Josh loves to say it, PHM, price has memory, go look left. Well, where's the next base after this? Well, there's a little bump here, and then down to here is a really good shelf of support. Are we going back down to, whatever this level is going to be here at, 10,711? I don't know. But I know one thing, this hasn't been the gold trade. It hasn't been a safe haven. It has gone from 69,000 and we're now at 20,000. Not knocking, you love Bitcoin, that's great, but it's in a bear market. By every metric that's out there, it's in a bear market. So what needs to happen? It needs to get to the point where the sellers are washed out, whoever that is, and then the buyers step in and start building it out. You're not going to have in a bear market with this kind of wave. If you do get a snapback rally, what's it into? Okay, so it's a reversion trade. So if you're a long bias in a bear market, you're looking for reversions or extensions of reversion trades at best. And if you're building a baseball analogy, that is how you're going to, play it. When do you bring in a relief pitcher? Do you bring him the first inning or the 8th or 9th? I mean, I'm not a baseball expert. I don't think it's in the first inning, right? That doesn't click. When's your relief pitcher come in, right? So he's not in the first inning, right? So where's the energy that when this thing comes back up again? What's it going to run into? Well, the top of a channel. Well, you don't have a channel mark, Scott. Well, I can connect the high to here to the high right here and extend it out. And I could subdivide that channel and find they're probably seeing about the mean of it right now if I took the time to do it. You're just trying to figure out where is support, buyers, where is resistance, sellers. And that's it. So I'm looking for a bounce. It could be a basic fib type retracement. It could be a reversion to the mean. The question is, what kind of work do you as individuals want to do to figure that out? But whatever you do, it needs to be consistent. That's the biggest thing. Moving average are always on the chart. Fibonacci's are not unless you code fibs to produce a certain way. Okay. And that's true for anything. I teach in Traction and Traction Pro. We talk about what will be discretionary concepts and what I call static. They're always there for you. They may move, but they're constant on the chart. Why do I do that? Because some of you don't want to use moving averages or MACDs. You want to get your hands in the mud. Others of you are much more, no, I want it always there. I want to trust what I see. And it all depends on the spectrum. If you're a new trader or you've been doing this for 20 years, Where are you on that spectrum and your comfort level? It's not a right or wrong, guys. Chris has a quest and a thirst for more knowledge. Somebody's like, man, just show me where support is. I'll buy it. When it gets to resistance, I'll sell it, Scott. We can do that. And it goes to Chris's point. Sometimes we don't intentionally disservice. We're trying to help educate you. But ultimately, you should know where the buyers and where the sellers, where support, where's resistance. What is the trend? It's either going up, down, the right. All right. Where are you comfortable putting your risk on from? It all depends on who you are. If it's a hedge fund, they might be comfortable buying Bitcoin right here because they want to start building a position because they're going to buy 100 million, whatever contracts or whatever, some, in valuation long term. And they want to start picking up some because they think we're going to go through the great reset and we're going to go back up, whatever. That they might have a 20-year horizon on this and think it's worth 500,000, whatever. That's what I'm saying. We don't know everybody in the market what they're doing. We're never going to. So why waste any more time on that? That's not with our conversation. Like in your own subconscious mind, stop spinning your wheels. Is it breaking support? Okay. Is it following through? Okay. Where's the next place where the elevator should slow down? Well, the little kid hit all the buttons. I'm in congestion, so I got to stop on every stinking floor, Scott. Or is there a massive waterfall cascade where there's nobody there and it's going to free fall for their, 2,000 points or 10,000 points or $20? Depends on what you're trading. Does that help, Chris? Did I do a sufficient job of trying to make sure?
Yeah. And the next thing I would say on that too is like, so you do your support and resistance, right? And you've got your levels of like, okay, here's where buyers are, here's where sellers are. Most of the time, and this doesn't matter what time frame you're trading on. You could be trading a 1-minute chart, you could be trading a weekly chart, doesn't matter, anything in between. Most of the time, the stock is in between those, right? So most of the time, should you be trading, right? If you've got buyers are here and sellers are here, and the stock's halfway in between, should you be taking the trade, right? You guys know the answer is no, right? So, this honestly goes back to Warren Buffett says, or I think even Jesse Livermore said this back in the day, didn't he? That like more money was made in the waiting than it was the actual like trading of it, right? Like most of your money as a trader, you're just waiting for the setups to get there, right? And yeah, we have computers that can find, okay, here are the stocks that match my setup right now. But, that's going to be a couple stocks a day, maybe, or, whatever. It depends on the timeframes you're trading and all of that. But, it doesn't matter what time frame you're trading. Let's say you're trading a 5-minute chart, right? Well, most of the time, the stock isn't going to be bouncing off of support or resistance on the 5-minute chart. It's going to be somewhere in between, or it's going to be in the middle of a big move, right? So you need to be waiting for the stock to hit the next level, to wait till it gets to the next pivot point, and that's your next trigger. And in between, if you have a position on, you're waiting for it to get to your target or your stop. And if you don't have a position yet, then you're waiting for the trigger to enter a position. So most of the time you should be waiting rather than trading. And I think a lot of people get into, I'm looking at this stock now, so I need to be trading now. And that's, not the case. You frame it, you trade it, or you frame it, you figure out the trade, like what you want, the structure and all of that. And then you wait and you wait for the trade to come to you. The beautiful thing, of course, is we can set alerts now, right? Let me know when the stock hits here, and then I'm ready to go.
What is it? Again, I get some people may be sensitive on to use an example, but fur trappers that trap animals for fur, you cannot like the ideology. They set their traps and they come back and check them at some interval. They don't sit there and wait for the rabbit to show up because the rabbit will never show up. They leave the site, they go far, far away, and they come back. Have you ever seen shows on people that do this? There's one based in Alaska of how they made their living around this whole concept and the different, traps and whatever they did and everything with it. And they might set, 50 traps and take so much time to go through them. You're stalking, you're trapping. You're not sitting here chasing. When people chase, they tend to go broke unless you have a unique system that is putting certain conditions in front of you. As I had when I started Traders Road in 2012, when I launched it, I had a room environment like we do with do for your group coaching. It was every single day. It was called Hub. The Hub, like hub and spokes. But there was also the little idea behind it, which was hands under butt. Sit on your hands. Stop doing this. Stop typing on the keyboard, stop being distracted, and let the trade come to you. And Trader Traction, I've shown them how to take multiple time frames with the RSI, floor trader pivots, and align trades just by recognizing the frame of the energy and the momentum. And when this conditions hit at this point of resistance, that is your area where you're looking for that opportunity to then take it back short, or if the reverse is true or the inverse, take it back long. It all depends on the framework. Is it more, going higher or lower, and how much energy is in that? If you're an active trader, you'll get more trades than that you can afford to take in a given year, period. But does that mean it's the most efficient? No. Everybody's different what they want to do. That same concept also works with combining a daily and a weekly, or a daily and a monthly. It's just going to take longer. One more analogy. You're on the lake or big river, whatever it is, where boats go. Okay. And so there's one up in Florence, Alabama. These nice homes. People got their nice private little cruisers and boats and speed boats, bass boats. And then there are these monster barges that go through the lock, the dam, whatever it is, right? I share this with you for one reason. Can the speedboat go a whole lot faster than the tugboat or the barge? Yep. Well, long moves in the market are not speedboats. Those are barges, and they take a long time to traverse through whatever it is, because they don't go fast, because they're hauling, 64 full loads of dump truck stuff on it, right? They're designed to haul large amounts and not at high speeds. The speedboat is designed to go fast, like a cigarette boat, right? The Don Johnson thing back in Miami Vice back in the days, right? They're designed for speed. Are you trading speed as in momentum? Or are you trading something that's slow and steady like a Hershey or a Verizon? The volatility, as Chris went through earlier, is ways to look at volatility beyond an ADR, ADR. You can go look at your options, because that stuff's being factored in the markets as well. It's a perspective. And once you find your stocks that you like, I've got Bitcoin showing up here. Here's NVIDIA, just really quick. NVIDIA has a great trading range. You should be able to go day trade that stock most every day of the week and have some success. I got a fund manager that loves the stock. It's the only reason I even watch anymore. But I also know it's in a bear market until proven otherwise. So what I accept that conditional state that I have a stock that has some good volatility, some good momentum, and I'm going to treat it more actively. The difference between a 1970s Cadillac, it takes a 40-acre field to turn that thing, but a go-kart or golf cart turns on a dime. Are you trading stocks that are slow and steady? Are you trading things that are really whippy and fast? You go look at a chart and you can see that. Do you want to trade things? I forget what stock you brought up earlier. Forgive me for this. I think it was Hershey or one of these. You mentioned a couple names that were more of where the gaps always touch. Guys, there is a whole strategy I could teach y'all one day on how to play the overlap on a stock that really doesn't gap. They always overlap. And this wasn't the stock. It might have been J&J.
Johnson & Johnson, I think.
Thank you. Earlier, yeah. It's driving me nuts. Guys, you could make everything you need to make from just a few J&J type stocks, just with a simple logical approach to it, and never think twice again. Why? Because they always tend to overlap, because it is Johnson & Johnson. There's nothing sexy about this stock. This is not Tesla. It's not Apple. It's not cutting edge. No disrespect to J&J. It's not supposed to be. It's a blue chip. But do you know that when you're trading versus trading crude oil, which will rip your neck off? I mean, it's just like, I need you to pick a direction and go. There are no holy grails in trading. It's between here. But once you recognize what you're looking to do, then go do that. Be the Chick-fil-A of that stock. Do one thing really well, a fried chicken sandwich or a grilled sandwich with a salad and fruit cup or whatever it is and some lemonade. Be the Ruth's Chris. Be the Dell Computer. Be the DuckDuckGo or the Google or the Amazon. Specialize. One more tip, and I'm going to wrap this up here pretty quick. I can't stress to everybody listening to me right now. A lot of people through TSU and other facilities, that might be on YouTube, a lot of you focus on futures like ES and Q, and you specialize in one thing and you do a really good job of it. If you're a stock trader, try to find 10 stocks that you would trade for the rest of your life. In theory, I get characteristics can change. Find 10 stocks that you feel that are a business model that give you the volatility of the range of your day trader or on a swing trade basis, and focus on those. Or if you want to trade the latest meme stock, then do that and do it really well. But build your model around that. Stop wasting time. And what I mean by that is, if I said, all right, Chris, here's your 4 stocks. He agreed with me. And let's assume that he's a technical trader and, like how I look at it. And he wasn't even trading options. Like he was not allowed to trade options. I know that would kill him, but pretend that was the case to get through the example. Here's your 4 stocks, Chris. You got 4 monitors. I want you on this time frame and 1 chart per monitor. You guys will be blown away when I do trader turnarounds of I force this on people. I'm like, you got to do it this way because I got to get you to get disciplined. And once you do that, you start to understand the characteristic of that stock like you understand your spouse, or at least I hope you do if you're married. And so now you become attached to that and you start to realize how the market makers play the game with it. Now you become a specialist, just like a floor specialist on the exchange, and you stop chasing the latest thing and never catching the rabbit because, well, you're a fur trapper watching the trap as opposed to letting the animal come to you. Why do you think mean reversion is so popular of a concept in the overall markets? At what 90% of algorithms are mean reversion because they're waiting to get to the fringe edge and then revert or reverse it back to the mean. That's it. That's what you're trying to do if you're trying to play the edges. If you're trying to play just a bona fide trend, maybe you're playing breakouts. Maybe you're going to catch a trend that you think is going to keep going. That's cool too. But you need to know what you're doing and why you're doing it, not how do I make money in the stock market? Well, buy here, sell here. Great. We told you what to do. But now if you had to go build your own fishing fleet of traders, how would you do that? What is your process that allows you to do that? And that's what I think Chris and I are both are trying to hammer back at y'all. He did it with the Power Trader Live on Sunday, which I didn't get to see. I've echoed his sentiments today. And you're going to hear this pounded at you guys probably the rest of this year from us because you're looking for the success of trading. These are part of the keys to getting there. This is part of it. It's not all of it, but this is part of it. So I hope that helps. I appreciate you being here today. I know we wrap this up. If you are not in the Traction Trader program or Traction Pro and you're interested, reach out to TSU Rebecca and she can get you details. You can talk to me, let me know because we start on the Friday the 1st with the boot camp. Anybody's interested in that still? Other than that, Chris, I'll let you wrap it up and we'll get out of here and call it a day and have a good weekend for everybody.
Sure. Johnny had left a question in the Q&A and I was going to answer it. I messaged him, but it looks like he peaced out. He probably had to go early. So Johnny, if you want to hit me up on Discord, I'd be happy to answer it there for you. So we'll go ahead and wrap things up here. Thank you guys for joining us so much. We'll be back next Thursday. I've got a market update coming out for you on YouTube later today. Otherwise, I hope you guys have a fantastic weekend and we'll see you next week. See you then. Bye.
I guess. Thank you.